All right, good evening, everybody. This is Ken at Tortoise Capital with the nightly strategy podcast for April 2nd, 2020. Just as a quick reminder of where we were, in yesterday's podcast, we talked our way through this series in U.S. Steel, and I talked about how I was posturing for the overnight swing trade, and that really turned out to be a pretty good lesson. I talked about how we set up different price levels from the previous night, and we were using those to estimate possible gains, and then we were setting up for an entry later on in the day. Oh, I'm sorry. I'm still out of sync by one. Sorry. Is this the one? Oh yeah, I'm sorry. This was the one from yesterday. My bad. So we had set up. There had been some early morning surges. We made money up. We made money on the way down, and then we set up this stalking trade, and then we ended up taking the entry at around 6:35 or so, and then had a hard stop down here at like 6:10. That's what I wanted to say. The follow through on that one. Let me find that chart now. Yeah. So the follow through on that trade was this. I'm going to cover how we traded in here in the middle, but what I wanted to just show was that today that swing trade stop that was at about 6:10 carried forward all through the day. It was threatened here but didn't hit, and then later on, after we got done with the tactical trading in this area, that came down and was hit here. So that's the idea behind core and turbo, is that there are things going on in the swing trade time frame semi-independently of the tactical turbo trading intraday. All right, and so at the moment when this stop was hit, we had already been short. We were already short on this leg down on a breakdown out of the Z3. And made a little piece, and then on the collapsing dragon, at the same price where we had just exited the long swing, we were getting short. We got a second position in, but then that ended up scratching shortly thereafter. And so what I want to say is that even while this is all going on, you got this combination of managing the previous day's swing trade and then doing the tactical trades during the day. As the day's geometry unfolds, I'm starting to plot price levels that seem to be significant. So like the very first one from the opening was at the peak that it got to this morning. That hump of the dragon is going to be a interesting price level all the way through the day. It could act as resistance, but if that resistance breaks, then it could act as support. So that's a possibility. At this point during the day, I notice the areas that I'm noticing are what is the Z3 Bollinger Band maximum excursion, and I carry that over. That's at $6.90, right? So what that means is that if we're in this time frame and we look north and we see a Z3 line up here, in the future, if price breaks through that $6.90, then that's going to feel like a really emotional moment for everybody that was involved in the tactical cut and thrust down in this area. That would have been seen as a significant change to the price levels for people operating on my time frame, which is the 1 minute charts. By the same token, this area where the RL10 rolls over and the Dragon rolls over, this area at 675 is going to be a significant upside price target. Right here I've marked off the peak of the VWAP and the peak of the RL270. Both of those we treat as measures of fair value for the long-term time frame. So that's going to be a significant price level. And so that carries across. So while this other trade is happening and it gets into a sideways quiet channel and then collapses out of that Z3 pinch, which gets us short and takes us down to this price level where we exit the swing long, and then we end up covering the short on this leg and then continue to stalk, and then it gets into another not only sideways quiet channel, this gets into a super pinch. And I want you to notice that's a super pinch because all four regression lines, the 10, the 30, the 90, and the 270, are all within a very tight window, and price in the dragon. So that's only a 10-cent channel right there. And when all of the regression lines and the dragon and the price are all inside that tight of an area, we call that a super pinch. And then the breakouts from a super pinch can lead to some extraordinary moves. So I don't know which way that's going to go. It wouldn't surprise me if it breaks to the upside because the VWAP is up there at 635. The peak of the VWAP was at 645, and in the selling pressure it had only decayed 10 cents. So an upside move out of this super pinch would not be surprising at all. And so as I'm starting to estimate the favorability of that trade when I'm considering reward and risk, and remember it's only 1 p.m. Central Time by that time, the upside moves are back to the VWAP. It could get to the previous peak of the VWAP. It could get to the previous hump of the dragon here at 655. It could get to 675. It could get to 690. If it gets above 690, then it would be fair to say that this thing could be off to the races. And then what I would do is I would go to my daily report, find the range stat, which is the maximum reasonable intraday move, find the low of the day at 585, add the range stat to it, and that would tell me the upper reasonable limit move for that day. That would be the maximum reasonable intraday move. Now I already sort of know how far south this thing can go, and at this point, when it breaks out of the Z3 pinch, I want you to notice that the size of that stretch from the VWAP, that's from like about 630 down to 585. So that's a 55-cent move to the downside at the peak of that excursion. Oh, that's not good. So one of the things that we notice then is how far can price move from fair value or the Bollinger Band mean on its maximum excursions. So we can use this now to start estimating. Oh, and that would be a crash. So many people watching the show, I guess. Huh? Let's try that one again. This is where I'm going to put the video on pause and then remember to... That's what I forgot last night. So we're back. So before we get into the other trades of the day, this is, I felt, a really essential lesson to learn. And what I'd like you to do is connect this to yesterday's discussion of U.S. Steel. So we've been basically making a lunch out of U.S. Steel, making a meal of it. Because it's at a critical state and is an important part of our industrial base, and we're in a transition to rebuilding America and all of that jazz. So U.S. Steel is kind of on my radar. And I wanted to show you the relationship now between turbo trading and core trading and how I'm using the elements of the RLCO Bollinger Band framework and the MACD histogram framework to construct what I call the trade framing or the geometry of these trade frames, and how we can start using these excursions away from the Bollinger Band or from the VWAP as estimates of the power of traders to move the price in tactical times. All right, and then this stop that we pulled forward here from yesterday was all about the carrying over yesterday's information into today. Now that swing trade lost 1R, but it's important to note that was money that was made from the 11R that we gained on U.S. Steel from the morning trade. Okay, so especially now when we're in bearish, volatile conditions, we have to be very measured in the risks that we decide to take. Okay, so that's what I wanted to say about that. So this was the tactical trading in U.S. Steel, and I'm going to go through these points. But I wanted you to see the simplified version first. So this is what I'm getting ready to discuss is all of the. Let me see if I can put it into context for you first. What I'm getting ready to do is talk about all of this trade action that's in the yellow box. All right. So I think of that as tactical time or tactical trading space. From the opening, and we're trying to find out what kind of direction it's going to be that day and how big. And then by the time it comes out of this move up and move down and then starts narrowing into this sideways quiet channel and then gets into this series of short trades where we're now going to take a look at the information that came out of the tactical trading time and carry it forward to understand what's possible on the upside. And that's where we get these purple lines over here that talk about the 5 tactical targets, so that if this trade that we took in here didn't break down but instead broke to the upside, well, then we would have measured moves on the upside to figure out where it might go and to figure out where we want to start adding positions and things of that nature. Okay, so I'm getting ready to talk now about the about this tactical trade. So let me get my little cursor, my big purple dot here. Okay. So the first thing that I'm going to notice is yesterday's VWAP was 663, so that's item number 1. So I carry that one all the way across because that's going to be an important price level. If today's price can get above 663, then there's a chance of this thing really having some legs. But if it can't get above 663, then it feels bad for the rest of the day. We're going to see that actually happened when we get out here. It sold off, had a couple legs, and we traded it up. And then when it got to the test, it only stayed up there for about 5 minutes and then collapsed into this sideways quiet channel. And then it collapsed in the second leg all the way down here around 585, as we'll see later. Okay, so the first thing that I'm doing is taking a look at the VWAP. The second thing I'm looking at is it then has a gap down opening, and then I notice in this time that the VWAP starts off the day right here. And then I also notice the belly of the dragon forms, and then a PSAR flip as it starts to move back up. And now at about 15 minutes into the day, we've sort of triangulated. It closed, the VWAP was here. It closed poorly. It moved up on its first leg, and so this is the peak of the RL10 15 minutes in. Then it reverses, and I get a PSAR flip, and I get a hybrid frog move off of the peak of the price. So I get short when it crosses the RL 270, and we get this is a pocket entry short. Now, I want to draw for you the collapsing dragon here, because there were some questions about that one earlier today. So a collapsing dragon occurs when I draw a line from the previous belly of the dragon and I come over here. So if this price, and I'm following this down, if this price falls through that red line, when it falls through is my collapsing dragon. because you can see the dragon swimming up and down, swimming up and down. If he goes below his previous belly, then this is a collapsing dragon. But where I got short was in the bend of the dragon, right here, when they get the RLXD and then it crosses through the VWAP and the RL270. That's where I get short. That is actually a pocket short. And what I'm doing is I'm front running this collapsing dragon. And so in this case, that works. It comes down. Now, the size of this leg from the peak of the dragon down to the belly of the dragon is one leg. And it turns out to be the same size leg. And it comes down to 0.4. And then it gives me a P1. So that's an RLCO outside the river. And because that's the first trade of the day, I don't mind getting short at about 6:49 and then covering at 6:30. That's about half an hour in hand. So that's not bad. And now what I have is I'm going to try, I have at point number 5, a PSAR reversal and an RLXD. So I give that a shot, because the rest of the market is actually doing pretty good. It goes up, it gets to test the VWAP and then starts to fail, and I get a PSAR flip. Tell you what I'm going to do. I just realized something. This could probably help. This may make it easier for you to concentrate on my voice. Okay, so let's try that. That's what I should have done earlier. Sorry. So now we get a rejection of the VWAP and the RL270, and so I just scratch. It comes down. It's testing the PSAR, so I just scratch. It now starts failing, and now what I have is, you will notice, a collapsing dragon, because I can come over here and I hang this on the edge of the dragon, or the belly of the dragon, and slide that over. Now what you can see is this entry here at the red dot is a collapsing dragon at 6. And then my stop is pretty tight. I just put my stop, you can put it right at the peak of the dragon. I wouldn't be offended if you put it at the PSAR. So that's really only about a 10-cent initial risk. So that's where we are at 6. And then I want you to notice down here is that the MACD histogram has gone below the zero line, has just started into the winter. So that makes this a really high priority short, and it's a new low of the day. So this feels like a down day, not an up day. It gives me a second leg down. There's a 1, 2, 3, and as it's coming up and it's getting ready to test my entry, I don't like losing money, so I just take a fractional gain and just get done with it. Now at 7, I still have some long side belief in the possibility of the upside here, so I'm going to buy an owl entry. Now this is an owl because we have an unambiguous move from 3 down to 6. We have a P1, which is an RLCO outside the river. Then we have the RLXD. The dragon is rolled up, and the 30 has rolled up. So that is an owl entry at 7. Now I don't believe in that thing, right? But it's something that I'm willing to trade. I don't have any conviction on it. I'm just trading. And then my stop is going to be right here below the belly of the dragon. I would not be offended if you put it below the belly of the RL10. But that's where the entry is, right there. Okay? So an owl entry at 7. It's working, and now you can decide where you want to put your stop. I don't care. By this time, I'm already thinking about a second position on this thing, because it has now cleared. It has cleared the hump of this dragon. So that would be an if I put if I put a second position in here, that's early, and I really am targeting here. This is where I want to put my second position in because it will have cleared the hump of the dragon at 3 and made a new high of the day. So rather than try to get too large too soon, I'm just managing my stop. So that's what's going on in my head. It comes up to the previous hump of the dragon, starts to sell off. Whew, it holds. Now, if I had had 2 positions in, so I'm sorry, let me pull this back. If I had had a second position in here and then I see this price action, I'm out. But because I only have 1 position in, I'm a little more comfortable. At 9, what we have is a continuation. So it's sold off, got a series of higher lows. The PSAR has held, and it is now clearing the hump of the dragon at 3. So I add a second position at 9. That's working. It is now above the VWAP from yesterday. I've already got 2 positions in, so I'm not eager to get a third one in. I'd like to see this thing run because this is really the test. Can it really go? If it gets above this line, then I'm going for a third position. But sadly, at 10, it gives me a P1 outside the river there, that RLCO, and I take the exit right there. So we get from 7 to 9 and then exiting here on 2 scoops. That's a pretty good trade. I want you to notice at number 8 what we have is that the Bollinger Band mean has now crossed over the VWAP. So this is kind of like officially a good move. This actually feels really good. This is the first test successful of yesterday's VWAP, so I'm still feeling pretty good. If this thing holds, I'm ready to stalk and get back in and just keep going. That would be wonderful. But it doesn't. After our exit at 11, it comes down to the Bollinger Band mean and tests, and then collapses through the 90. And now at 12, it's getting ready to cross the VWAP. So now I'm going to play an owl. This is an owl short. So here's why. Condition 1, unambiguous move up, a P1, regression line crosses the dragon has rolled over at 11, the RL30 has rolled over, and then we got a breakdown. So off I go. You'll also notice that this has the added advantage of being kind of a collapsing dragon below this belly of the RL10. So at 9, where I got that second position in, this is where it voted north. But this time it didn't hold support, it collapsed. So that feels to me like there is buyer's conviction leaving the market, that they're not believing in this trade. So 12, we're short. It crosses the VWAP and the RL90. I would not be offended if you took this exit. I didn't. The rest of the market was suffering, and U.S. Steel was pretty bad compared to the other steel makers. So this thing rolls over a second time. It does not come through the dragon. PSAR is still solid. So I put a second position in now that it has crashed through the VWAP. So I've got 2 positions short. At 14, it makes a bottom. At 14, the RL10 rolls up. At 15, my second position short is now at scratch, so I cashed that there. Could I have been a little faster here? Yeah, could have been. I was really interested to see if it was going to test here. If anything, I could be a little better there, but I was willing I wanted to be large on this one if it collapsed. So this one is a scratch, but this short from 12 is in the money, and that feels pretty good. Now what I'm noticing at 16 is it has now come, the Z3 lines have started to pinch. It's gone sideways for about 15 minutes. So the Z3 lines have pinched. The VWAP and the 90 and the 30 and the 10 are all inside here. So this is starting to approach a super pinch. And I notice that there's a double bottom. There's a double bottom here in the RL10s. See the maximum excursion to the downside is still there. So if this holds, it will have held at the same place that it held before. The last time that it held there, it gave me a really nice move on 2 positions up. So I'm not opposed to making that trade. So I no longer have a downward bias on this thing. Continuing to collapse. The Z3 lines are really pinching. I've already programmed where those upside moves are going to be. So if this thing if it breaks out of Z3 and goes up, then that's my price ladder up to 21. If it breaks down from here, it's going to come at least to this level, and then there's going to be a big collapse. And the size of that collapse would be the size of the collapse from 10 to 14. So in terms of projecting. And then I notice that I'm in lunch, but I also notice that there has been some price improvement. It's gone from the winter into the spring and is now testing the summer. So this really is a moment where the morning trade is over, and this just feels like the end of tactical time. So I just decide right here, I'm going to buy it at 18. And here's why I buy this at 18. I take a look at all of this support that's baked into the cake. Under these humps of the dragon or the bellies of the dragon. Then the PSAR flip each time occurred at this price level. And I said, you know what? If this thing goes to the upside, I can see clearly how that trade could unfold. And so I'm still this far away from the VWAP. And as we get later in the day, there's a good chance that the price is going to move back to the VWAP. So if I can buy it here and I have a very tight stop down here, well then, I'm going to have, I'll be very small if I'm wrong, and then if it falls through here, I'm short, and I haven't paid much money to discover I was wrong. But then if it works to the upside, I get a great first entry. If it crosses the VWAP, I'll put the second position in at 19, and then I'll wait for it to clear 10, make a new high of the day before I put my third position in. And then if it crests above 21, which is the peak of the Z3 excursion, then I'll have 3 positions in hand. I'll probably have 6 to 10 R in hand, and it's just at the beginning of what could be a melt-up move. So that's the transition from tactical time to operational trading, and this is the price level that we bring over from yesterday's significant prices. And I'm still watching this price here at number 1, which was yesterday's VWAP. So if I can get through yesterday's VWAP, I will have 2 positions in hand and probably 5R as it begins to make its good run. But as we saw on that other the other trade, it actually didn't do that one. This was how far we got. It got into here and then collapsed. Okay, and then so that upside move never manifested. It gave us one more leg down, and then this last trade kind of scratched. And then it was getting towards 2 o'clock Central, and I was just about out of gas on the on U.S. Steel, because it was miserable. So that's that one. So that's the tactical trading lesson on U.S. Steel, and I wanted to show the relationship to yesterday's trade case because I wanted to be able to carry that over. Now, what I want you to notice over here is I wrote a note on Patreon, which we're going to go take a look at, I think, and I said something like, I put a logic chain in there, thinking out loud like a strategist. So here's what I've noticed. I've noticed that the Fed is going to print unlimited money. I've noticed that global supply chains have completely stopped, and everybody now realizes, finally, that you have to have organic manufacturing and services in your own nation if you want to stay alive. So I think over the next 10 to 20 years, we're going to see a rebuilding of the American manufacturing and services and transportation infrastructure. To do that, you have to have companies domestically headquartered that know how to make things. If you want to make things, you got to make it out of steel. So U.S. Steel is one of our two biggest steel companies, the other being Nucor. Well, we also need guys that can do some of the others. Like we need Caterpillar to produce bulldozers. We're going to have Home Depot for supplies and all that other stuff. You got to have Cleveland Cliffs to support the steel makers. So what I assembled here was companies that I think have a good chance of benefiting from a resurgence of money in the U.S. Infrastructure. All right. Now, the $2 trillion that the Congress gave to the large caps is either going to go help them get squared away on their operations so they'll do better, or they're going to use all that cash to buy distressed small and medium-sized companies and then add to their capability. So the symbols you see on here are the ones that are kind of like large caps, but I'll be adding to this infrastructure screen. So in TC2000, I just have a separate portfolio watch list for infrastructure. Now in TC2000, I can also just click and say, show me the industrial sector, show me the steel sector, and then I can open that thing up, click on a symbol, and then it puts all of the current price data into my standard charting package. So that's pretty nice. So this was just the first thing that I had going on. Now I want you to notice that while all this shenanigans of U.S. Steel was going on, at that moment, U.S. Steel is down. Let's see, is down 1.7% at 628. Later on the day, that gets down to 585, so it loses another 5%. But meanwhile, other steel companies like Nucor Steel was up 0.67, and the Dow is up 152, and Caterpillar is up 4%, and PE, this energy company my brother talked to me about the other day that we framed up, is up 21%. 21%. And energy's up 9%. So while I'm squirreling around over here fighting for pennies and nickels on U.S. Steel, I'm using my radar screen to help me find other no-brainers, other low-hanging fruit. So while I'm in the tactics over here, I'm looking at this watch list for operations. So this is PE. This is Parsley Energy. And so my brother somehow found this, and we framed it up and talked about it during the speed run the other day. And here's what Parsley Energy did. They were up 20% 2 days ago, and then yesterday were just kind of like an inside day and nothing. And then today, oil opened limit up. And so Parsley Energy, a mid-cap company down in Texas, had a nice gap up and gave me a hybrid frog entry. So I just said, screw it. That's where I bought my mechanical swing trade position entry, right at the VWAP. And then I noticed during the course of the day, here's the peak of the 10, here's the belly of the 10, and the VWAP provided support all the way through. So I just made that a sideways quiet channel. And drew that from the peak of the 10 to the belly of the 10. And just draw that line all the way across today. So that's a 20 cent, or no, was it 30? Yeah, 30 cents of initial risk. So I now buy a turbo position here. And I'm noticing the 270 is going up, the VWAP's going up. A ton of buying pressure comes in. And all that green means they're hitting the bid. Or they're hitting the ask, excuse me. So this thing takes off. So now I've got a swing position on with about $1 stop. And then I got a swing position on with about 30-cent stop. This thing runs up. I missed the second position on this because I was fiddling around with U.S. Steel. and my span of control didn't allow me. But if I were going to add a position, this would be the place I would put it in, because it takes out the previous Z3. It runs up another leg and then gives me a P1 and RLXD. And I said, you know what? I'm going to exit the turbo position and just make bank. The size of this position is 3 to 4 times the size of my swing position. So the money that I make on this is funding the overnight risk I'm going to take on that. That's the turbo. I didn't get the short side because I'm not a big Parsley Energy trader. That's the first time I've traded it. But I notice as it's decaying that the RL270 crosses the VWAP. I notice the Bollinger Band mean and the RL90 roll over. So now I'm thinking that this run is done. If it was going to continue, it should have gone right away from here, but it didn't. It just decayed, and then gave me another sideways quiet channel, and then it starts to take off again. It found support where it broke out of before, so this is now feeling like solid support. And I said, let me just try it and see how that goes. And that turned out to run up another good distance and was manageable. So that's Parsley Energy, another example of core and turbo. This one was the U.S. Steel that we've already seen. There was a question in the chat room to clarificate the emerging dragon and the collapsing dragon. So here's a mini masterclass on this. I want you to think about it as a 1, 2, 3, 4. So on the emerging dragon, what we're going to do is we're going to buy a breakout when it takes out the previous higher high. So at position 1, we have a low, and then you see the RL10 rolls up. And you can do this with either the RL10 or the dragon. And in the big indexes, sometimes you just got to use the RL10 because they don't move as sharply as the RL10. So I'm using the RL10 here. Point a low, a high. It comes back and makes a higher low at 3. And now I draw this line across from 2. And if the price breaks above that line, like it did at 4, then I'm buying an emerging dragon. It's a lazy W up to the right. And now an entry at 4, it makes a new high and then starts to roll over. I'm not offended if you just cash that, especially in an index. Get paid. Just try getting paid for a while and see how that feels. Now, here's what I'm noticing. Here's a high. Here's a low. Here is a lower high at 3. So notice how this is decaying. I want you to notice the RL10 rolled over as well. It's easier to see in that one. And the 30 is rolling over. This is an owl right here at 4. It's also the collapsing dragon. So you have a high, a low, a lower high, and then when it breaks through the belly of the RL10, that's an instant short. Collapsing dragon 4 all the way down to here. And then you have a 1, 2, and that RL10 starts to roll over. Just get paid. Just get paid. And now you got short at about 251, and you made $1.50. That's 150 points on S&P. Just try that for a while and see how you feel. Now, I want you to notice that you see where the belly of this RL10 is? I'm going to draw a line from here and stretch it across. So if this thing goes up and doesn't make a new high, as soon as this thing rolls over, then my next collapsing dragon is going to be down around 249. That's the difference between the emerging dragon, 1, 2, 3, 4, breakout, and then the collapsing dragon, my favorite pattern of all time, 1, 2, 3, 4, collapsing dragon. Devon Energy, this one had basically the same pattern as that Pinnacle Energy. Devon Energy, as you know, is my favorite. It's the same pattern. Yesterday, along with the whole energy sector, it had this very tightly compressed 20-cent narrow closing range. Gapped up to the VWAP. It made a high with the RL10, a low, And now this is a emerging dragon in a Z3 breakout, and it's above the VWAP. So I just buy it with a stop down here at just below the VWAP. So that is about a 20-cent risk. 20-cent risk. It takes out the previous Z3. So since I trade Devon Energy and I don't trade Pinnacle, this is still the same trade as the other one. It made that big run up while oil was exploding, and then I was slow and gave back half of it, but there you are. But that's 2 turbo trades intraday. Then it decayed, and then it broke out across the VWAP, on Pinnacle, or whatever that other one was. I think it was Pinnacle. Or maybe it was U.S. Steel. I bought inside the river. This one I played the crossing of the VWAP. And now I've marked off my trades to the upside. This hump of the dragon, if it gets above here, then I'm going to lock in a gain. That's where the upside right here is, right by the RL270. It's starting to fail here, but then it made a run up. So I'm hoping. But if it goes below this, I'm going to just scratch the trade. Where I would put my second entry in is if it took out the hump of the dragon. I'd feel very good if it took out the RL10. Then if it eclipsed the Z3 excursion is where I would add my third position. Okay, enough on that one. Quick look at the closing of the day, or the running of the bulls, or whatever. So today was kind of an inside day. It opened low and then closed pretty strongly. So here's the 1-day range in the S&P. This is all on S&P on 1 daily. We have the 10-day range. So a breakout above 263.73 is a strong buy. The 30 is kind of up here and off the chart. Fair values at 308 3/4. Here's the Bollinger Band mean at 271. This is a 10, 20, 30% sell-off. Right now we're at about 32% in the sell-off. The 10-day low and the 30-day low are all strong support at 218. Now this one, the belly of the dragon at 236 turns out to be really huge. That is on the weekly chart, that is very strong support. So this is the strongest support that there can be. If this move that started back here 10 days ago, if this thing collapses through 236.81, look out below. There's another 10% move to the downside. And then all of the joy of the last 6 or 7 days is gone. That's how vulnerable this thing is. It's just in the middle of a dragon. And it had its first test yesterday. And today was a vote of confidence. Tentative, but a vote of confidence, and they were willing to carry it overnight. It's really got to get above the 10-day high to give me any sense of relaxation. And then above the Bollinger Band mean, and then I can start to breathe a little more easily. But in the meantime, this is tactical time and white knuckling. So we're still in the spring. In MACD histogram, we're in the middle of the Red River. So there we are. Today's closing price actions it was all oil all the time. Oil was up 16%, Devon Energy 14%, Chevron up 11%, XLE, the energy sector, up 9%, Zeus Steel 10%, Walmart was up 4%, etc., etc., etc. The S&P is down here at plus 2.35. U.S. Steel sadly closed at 6.12, so it was down 4%, and so it closed. That's where I had to get out of that swing trade, but we made some money back. Now, Wynn and Virgin Galactic all got smashed. Boeing got smashed. Simon Property Group got smashed. You owe it to yourself to go look at the speed run to listen in on that. I just want to put in a plug for that Forex course is going pretty well. The course just started Sunday night. The boys are up $3,700 on those are the pairs that they're tracking, and the course is going pretty well. Really good feedback already from the students going through the beta version of it. So really proud of Eric Morrison getting that done. In the daily report, you'll see the This is the auto framer. So these are the reward to risks that are available if it goes up to test the 10-day high. So things like American Express, Walgreens, Disney, Boeing, Japan, Brazil, real estate. If we used today's risk as the risk, and then counted how many of today's risks are there up to the 10-day high, that's how you get the reward risk ratio. This is today's range risk. The auto framer takes a look at a quarter of an ATR versus the range risk versus the max versus a full ATR risk, and it picks the one that's in the middle. Right now, it's all the range risk. Like one ATR in Boeing is $24, but today's range was $16. So it uses, and then a quarter of an ATR is $6. So it picks the middle risk, and then it counts how many of those range risks or the chosen risk to the 10-day high. And right now Boeing is at 3-to-1, American Express is at 6-to-1, real estate at 2-to-1. So that we just use that as trade location. This one is the pinch report, and what we take a look on the pinch report is we take the range stat and divide it by my risk. So we compute the range. In this case, it's all the range risk, and we said, now, if it opens inside today's range, and then from there makes a range stat move north, what's the reward to risk ratio? Well, Treasuries is 4.5-to-1. And what that means is the kind of candidates you get on this report are all the ones that had a very, very tight range, like a coiled spring. And if it breaks out of today's trading range, then you get a one-day pop that's very attractive. It's important to notice that the S&P, real estate, McDonald's, technology, Brazil, Microsoft, the Dow, and Treasuries are all in that very tight compression. So when we go take a look at the range report or the health check, just notice how tightly compressed today's range was compared to the size of those previous moves that give us very large ATRs. So this is like a coiled spring, and if it breaks out to the upside, it could get to 273 easily, but it could also break through all of these support levels and collapse in a big way also. So that's how we use that report. Okay. I want to share what I just think is an amazing piece of work from Joe. So if you're following along on Patreon, the Coachable Moment, he asked me for some advice. I said, well, get your gear together and then tell me what you think I should tell you. So I gave him a systematic way to evaluate his situation. And then he came back to me. He did the 10 things in summary, and he put together this trading journal. And I just want you to see what professional behavior looks like. +1 to Joe on this one. So the first thing I'm not going to read all this, but I want you to just see. The first thing I asked him to do was describe his environment that he's working in. So he did. He's working from home. He's got kids. I asked him to consider the factors, actors, and circumstances. What's going on in that environment? So he looked at the factors and the effect of the virus. And he looked at his history, which said historical data suggest that trading has not been profitable in the past, so he's trying to make that change with professional behavior. He started looking at the actors and resources in his environment, and he's got a good team. And he's got some other resources that are available that are helping to guide him. His circumstances are, the most recent stuff is some context, so he's described that. Now, he's not spending a lot of time bullshitting around here, but he's getting right to the point. Fearless. Then I asked him, assess the performance of what you just have been through now from multiple vantage points. What was done, looking at his actual results of actions taken, and things that were not done. And then I asked him to take a look at his preparation. What has he done so far to get to where he is? He's done a lot of things. What has he not been doing that he should be doing? He should be doing those things. So, Joe, do those things. I asked him to apply a sustain, improve, and an action model to figure out what he should do, so he did that. Now, his improvement plan. He's got a red dot, green dot. These are the things that he's committed to in writing with a visual management system. It's physical fitness, emotional fitness, family fitness, trading, planning, preparation, and executing, getting his shit together, nutrition, hydration, and he's evaluating himself, and he's got an accountability partner. And she loves him. And they're doing it for the kids. So he's also working on self-awareness and managing his risk. He then did a modified SWOT analysis, reminded himself of his strengths. Hey, don't lose that list because you're not going to get weaker at any of those things. The weaknesses that he's working on, he's got some things that he can do to improve the weaknesses. There are some opportunities to do things, including the one, hey, what should I do about additional trading education? I told him, when you are having a challenge to your emotional stability and psychological capital, is not the time that you go out and look elsewhere outside yourself for new information. You already know everything you need to know about how to make money in the markets. You're up 36R in the month of March. You gave back 12, but you kept 24. So just get your shit together and concentrate on the things that are making the difference. And it's not lack of knowledge that's doing it, it's lack of doing it. So just relax. Both of those things, those threats, we know exactly what to do with that. I owe you some more work on considering the categories of strategies. And that is really strengths, weaknesses, opportunities, and threats. Those were things that you can do. I'm going to talk you through that in a separate one. And then the role of prospectors, defenders, reactors, and integrators. When you put together your list of possible things to do, protectors are really motivated by preserving what you have. Prospectors are trying to figure out how to put strengths on opportunities to go for the big win. They can be greedy if they're not businesslike. That's what they worry about. But they're trying to get the big win. A defender is someone who is trying to protect against a weakness, whether there's a threat or not. It's just you're aware of your weaknesses and you're going to do something about it. That's what a defender does. A reactor takes a look at the threats and says, do I need to put a strength on that to crush it, or do I have to try to avoid it because of it's going to get on my weakness? So a reactor is externally motivated and looking at threats and trying to figure out what to do. An integrator is someone who takes a look at those first three, prospectors, defenders, and reactors, and then integrates all of those possible strategies into a single blended set of recommendations. So now that he's thought about all the things that he could do, I asked him to remember purpose, place, progress, and posture. What's his purpose? What's your place of work? How are you going to make progress? And then what is your posture for success? Your stable base to go from? Now remember that your boss, the person that you're going to brief, your chief decision maker, is going to make a decision for you on the basis of intuitive risk and reward. You just went through a systematic, rational process, but the emotional intelligence is really what the chief decision maker must take into account, because at the end of the day, this is a human endeavor. So whoever your chief decision maker is, understand the emotional content and respect that decision. And then you as the chief of staff can make your best rational recommendation and then figure out what you're going to do. Short term, those are the things he's committing to. And I'll tell you what, on 1 May, when you check in, you better have that stuff done, or it's not going to be pretty. Well, you can say that to yourself in whatever whatever voice you need to hear that in, however your boss speaks to you, your accountability partner. And then long-term actions, maintaining those things that are on his chart and just tracking it day to day, but getting it done week to week. And so these were the results, remember? up 36 are. The last 3 or 4 days, though, there was a substantive difference. In fact, in the last 7 days, you went from a plus 26 and you were feeling awesome. But then the next ones, that's where the loss of psychological capital occurs. That's not the time to search outside yourself. You already showed that you know enough to make R. So do the things to lock it in. That was the advice that I gave him. So he asked me for advice. I could have told him that when he first asked me, but that's not my job. I'm trying to put myself out of a job here. I asked him to go through that systematic process, come up with some recommendations, figure out what he would do if he was on his own, commit to it, and then take a look at the things that I said. And then evaluate my coaching recommendations through the lens of what you already know you have a plan to do, right? So we're not only trying to solve the current situation to seize opportunities and protect against problems, but we're trying to build the metacognitive capability in the emotional intelligence and the emotional resilience, and this systematic process of reviewing your situation to come up with the best set of recommendations from your staff, from all these guys that are inside of you, right? So that's what I'm really so impressed about with this piece of work. He got this done in 24 hours. And that's what the Hagakure says. Within the space of 7 breaths, you got to know what it is to do, because you were so connected to your purpose, place, progress, and posture that you always know what's most important, and you're always on the lookout to see how you can leverage that or to do better in those areas, and you don't get lost in the trivial many, but you stay focused on the important few. That's the important lesson to learn from Musashi in the Book of 5 Rings. Do not engage in useless activities. So I'm just so impressed with that work, Joe. I just got to tell you. Now, I'm not going to say it's amazing, because this is what you're supposed to do. So I know you put a lot of work into that. I want you now to take all the positive feelings that you have from having done that work and just lock it in right now. Ratchet that in and say, that's the new normal. That's what you're supposed to do. I'm not going to be amazed if you do that again. That's what you're supposed to do. That's just what a professional does. I mean, when you hire that mason and he comes out and builds you a beautiful brick wall, you can admire the artistry, but in his head he says, well, that's just what I do. If you're going to build a wall that's going to stand the test of time, then you build it like a mason. So this is what you do now as a professional trader. And that's the feeling of professionalism, the quiet competence that comes from craftsmanship and crafts knowledge that you have to know inside personally is satisfying, because that's what stands between you and all of the little voices of doubt and distractions that fill the world every day with chatter. Turn off the chatter. Let it flow through you. Stay focused on what matters. That's what counts. Okay, so very proud of your work here. You should be proud of yourself, but keep going. Now we're going to see if you keep going. Now that you know what you have to do, I dare you not to have it done on 1 May, because then you'll just get shredded, won't you? You're not going to let that happen. So very, very impressed. That's everything I think I wanted to cover tonight, guys. I'm going to turn this into a documented lesson in the coaching and psychology course on the learning management system, because it's so good that everybody else is going to learn off your hard work. So you were the lead sled dog on this one. So very, very well done. All right. And on that note, that's everything that I wanted to cover tonight. I will get the video processed and hung, and the the daily report review is also getting uploaded to YouTube as we speak. So we're an hour into this. Thank you so very much, guys, for your patience and hard work. Keep up the good work. And we're going to beat this thing. All right? We're just going to beat this thing. Hang tough. Miles to go before we sleep. But let there be no doubt that we're winning. We are going to win this thing. All right. Take good care. Keep your wrist measured and your powder dry.